Let me give you the overview you need to pay attention to when we talk about Form 8853 here. I want you to look on the screen here. So we're speaking about the Archer MSAs and long-term care insurance contracts. And so you put your first name, last name here, and your social security number. So let's first talk about Section 8 Archer MSAs. And so if you had only a Medicare Advantage MSA, you want to skip this section and complete Section B. But in our case, this applies, so we are going to we're going to do a part one. So here on line 1, you put your total employer contribution to your Archer MSAs for 2023. So this amounted to $10,000. And for line 2, we have Archer MSA contributions you made for 2023, and we have $3,000 and this applies for this year. And if there's any limitation that you have from line 3 limitation chart and worksheet in the instructions, you have $1,000 also. And if you follow the instructions on this form here, on line 4 we put $1,500. This is applicable to our form here. And for line 5 we have $1,000, and the $1,000, this is because you have to enter the smallest of line 2, 3, or 4. So line 2 is 3,000, line 3 is 1,000, and line 4 is 1,500. So the smallest here is 1,000. Okay. So part 1 is done. Part 2, we have Archer MSA's distribution. So here the total distribution that you received, and I and my spouse received in 2023, 4,000. And line 6B, 1,500, line 6C, 2,500, and line 7, unreimbursed qualified medical expenses, we have $500, okay? And taxable Archer MSA distributions here, we have 2,000. This is for line 8, so this is applicable to line 8. And for 9B here, we have additional 20% tax. So in this case here, we have $400. So you can see the line, so line 8B is taken care of, Section A is taken care of. What about Section B? Section B actually relates to a Medicare Advantage MSA distributions. And so if we continue with our hypothetical example here, we have a total distribution that I received in 2023 from all Medicare Advantage MSAs, 1,000. And line 11, we have a $1,500. I want to show you real quick the line 3 limitation chart and worksheet, so you have a clear idea what I'm talking about. This is how it looks like on the screen. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Moving on here, I want to show you on Section C. So you put your first name, last name on all forms, and so also your social security number of the policyholder. In my case, this is my hypothetical social security number. And so for Section C here, the long-term care insurance contract, you put the name on the insured. This is my name, my social. And line 15, you actually check the right boxes. And you skip into line 17 here, we put the LTC, the gross LTC payments, and $6,500. And so line 18, 5,000. And line 19, actually 0. And so when you add line 18 and 19, you have $20,000. Okay. And for 21, you want to multiply 420 by the number of days in the LTC period. So this is basically, you just follow instructions that the IRS gives you. And here, this amount to $4,200. And for line 22, we have $2,700. And so when you enter the larger of 21 or line 22, we have a $4,200. And so reimbursement for qualified LTC services, basically for this year, actually amounted to $1,700. And if you go from if you subtract line 24 from line 23, we have $2,500. So you can see that the calculation is pretty straightforward in both cases. It really depends on your situation here, but those numbers that I'm choosing here, those numbers are hypothetical, of course, but it just gives you an idea of how the method is actually proceeding here. So line 26, in terms of taxable payments, we have $2,500 as well. So you can see, and this is the data you have to report on your form 1040 NR, 1040 SR, and other ancillary, if you will, related forms to a 1040. In some cases, you might have to actually put this on Schedule A also itemized deductions. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 8853. Let me give you the approach you need to really pay attention to here. So when we talk about Form 8853, Archer, MSAs, and long-term care insurance contracts, it's important to really understand that there are a few situations that require that Form 8853. So if you or your employer made contributions to an Archer MSA within the tax year, if you received distributions from an Archer MSA or a Medicare Advantage MSA, if you received ownership of or a payout from an Archer MSA or a Medicare Advantage MSA resulting from the death of the original holder, if you received taxable payments from a long-term care insurance contract, if you received taxable accelerated death benefits from a life insurance policy. So there are instances where you have to really you have to see whether or not your situation really applies to filing Form 8853 or not. So if your spouse meets any of the situations that I gave you earlier and you are filing jointly, you want to include the form with your joint return, even if you had no such activity. This is really pretty specific. Now let's talk about Archer MSA eligibility, because this Archer MSA eligibility really applies to specific cases. So Archer MSAs cover self-employed workers or those who work for a company with an average of 50 or fewer employees over either of the preceding 2 years. So your health plan must be a high deductible plan, and you must have no other health coverage, although there are some exceptions to the rule. Let me repeat that because this is very important. So basically here, your health plan must be a high deductible plan, and you must have no other health coverage, although there are some exceptions to the rule. You cannot be enrolled in Medicare or claimed as a dependent on another tax return for the current year, and eligibility requirements must be met on the first day of each month for which you claim an MSA deduction. So it's one of those things where if you have to claim this deduction, make sure that you are in compliance, because if the IRS were to start actually auditing your return, you do not want to have penalties or interest or whatever, and they do actually conduct some audits around this topic a lot. Let me talk to you about some additional eligibility exceptions. And there are a few of the exceptions. To the rules. If your spouse doesn't have a high deductible health plan, you may still have an Archer MSA, as long as you are not covered under your spouse's plan. And additional insurance coverage exceptions include insurance that provides liability benefits, fixed amounts per day for hospitalization or for a specific illness or disease. And you also have coverage for accidents, dental and vision care, short and long-term disability or long-term care also is permitted without affecting Archer MSA eligibility. So this is kind of important to keep that in mind. And there are other considerations though. I really want to explain that. And if your employer made contributions to your Archer MSA, you are not entitled to a deduction for your own contributions, though you will still complete Form 8853. So amounts paid from Archer MSAs in excess of qualifying medical expenses may be subject to an additional 20% tax unless the amount meets a qualifying exception. And amounts paid from Medicare Advantage MSAs in excess of qualifying medical expenses may be subject to an additional 50% tax unless the amount meets a qualifying exception. So it's one of those things where you have to see what situation applies to your particular case. But one thing I want to say here is that everything I'm telling you about Form 8853, you have the ability to actually file this form electronically, so that if anything is complicated for you or a little confusing, it's just a lot better to file things electronically. So let the software do the work for you. And because if you have to keep track of all the data, it can be a little complicated. Now, having said that, whether you file electronically or manually, you'll still have to have all the paperwork. If the IRS were to ask you a few questions, or were to ask you like to provide to actually back up your claims, you have to be able to provide all the paperwork, all the receipts, everything, all the statements, all the insurance contracts, all the insurance, like policies, everything to the IRS to back up your statements. And one thing I also want to say here is that please make sure that if you're filing jointly, that means you have to maintain a separate set of records to make sure that you or your wife also comply if they have to. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form 8853, and we are speaking about how to actually file the form. Let me give you the steps you need to really pay attention to here. So when we talk about Form 8853, the primary purpose of the form is actually to report Archer medical savings account contributions, including employer contribution, to calculate the Archer MSA deduction itself, to report distributions from an Archer MSA or Medicare Advantage MSA, to report taxable payments from long-term care insurance contracts, to report taxable accelerated death benefits from a life insurance policy. So this is kind of important. So, and the thing is that now it's important to really go back for a second to really understand what an Archer MSA really is, so that everybody has a clear idea what we're speaking about here. So an Archer MSA is basically a tax-exempt trust or custodial account set up with a U.S. financial institution, such as a bank or an insurance company, used to save money exclusively for future medical expenses. There are cases where also an insurance company can actually, not insurance company, a credit union can actually help you set up an Archer MSA, not a problem. So an Archer MSA is actually similar to a health savings account in that it allows an eligible individual to save and pay for healthcare expenses on a tax-free basis. This is kind of cool. So a Medicare Advantage MSA is an Archer MSA designated by Medicare to be used solely to pay the qualified medical expenses of the account holder who is eligible for Medicare. So this is kind of important to really see the distinction here in terms of what each account is used for and the purpose, okay? And an LTC insurance contract covers long-term care services. And in this scenario, in this configuration, the policyholder is the person who owns the proceeds of the contract or viatical settlements and is required to report the income even if the proceeds went to a third party. So the destination of the proceeds doesn't really influence the eligibility for this form. It's all about the origins of the form. It's not the destination. One thing I need to say here is that I want to go back to what I said earlier about paper trail. You got to maintain a proper paper trail just in case the IRS is really kind of curious about your Archer MSA or your LTC deduction claims. You have to be able to back up things. Let me talk to you a little bit about Archer MSA contributions and distributions. Now, it's one of those things where you have to really adapt the laws to the laws and limits and thresholds, if you will, to your specific situation. So the taxpayer can claim a deduction for contributions to an Archer MSA, whether they itemize deductions or not. And contributions may be made by the taxpayer, spouse, someone else, or an employer. However, the taxpayer and employer cannot contribute to the MSA in the same year. This is important to really remember. And employer contributions are not tax deductible. However, contributions by the taxpayer or someone else for the benefit of the taxpayer or spouse may be considered a deductible contribution for tax purposes on the plan holder's return. And if the taxpayer is claimed as a dependent by someone else, no deduction for a contribution is allowed at all. And what happens here is that you have the ability to adjust things based on your situation, and distributions from the Archer MSA must be for qualified medical expenses for persons eligible to participate in the plan. And distributions not used to cover unreimbursed qualified medical expenses are subject to an additional 20% tax unless one of the following exceptions applies. So you have distributions are made after death of the account holder. So if you have the ability to prove death by a death certificate, then this exception will apply, not a problem. If the account holder becomes disabled, also here we have an exception. And if the account holder turns 65, also we have an exception. So basically, you have distributions are reported to the taxpayer. For Archer MSA distributions, you have Form 5498 SA. For Medicare MSA distributions, we have Form 1099 SA. For long-term care insurance contract payments, we have Form 1099 LTC. So to enter distributions reported on Form, let's say 5498 SA, 1099 SA, and 1099 LTC, you have to actually you have to go with the appropriate tax softwares. It could be a tax layer, it could be a tax act, it can be a TurboTax, it can be Jackson Hewitt. You have to select the categories of deductions, adjustments, and medical savings account. And so one thing I want to say before closing this section here is that amounts paid out of a long-term care insurance contract are generally excluded from income, although there is a limitation on excluding per diem payments. If the taxpayer is determined to be terminally ill, both accelerated death benefits and the proceeds of the sale of the policy in a viatical settlement are fully excludable from income. On the other hand, if the taxpayer is determined to be chronically ill, the benefits are excludable to the same extent that they will be under a qualified LTC insurance contract. So the bottom line here is that you are basically using Form 8853 to report distributions from Archer, MSAs, and long-term care insurance contracts, and you are doing this because you're trying to really not only comply with your tax obligations, but also to reduce your tax liabilities. Okay, and it's one of those things where you have to. I think I've said this before, but you have to really maintain some kind of a paper trail. So when we talk about MSA contributions and deductions, you are basically maintaining a certain level of compliance here. If you are filling out a Form 8853 as a married couple filing jointly, you may need two separate forms because each spouse needs to fill out Part 1 separately if both are enrolled in a high deductible health plan with self-only coverage, in other words, not family coverage. So if your employer contributed to your Archer MSA, report the total contributions on line 1 always. You always have to do this. And you want to report your contributions for the tax year on line 2 and do not include rollovers. It's important so that you can separate the calculation. For line 3, you want to fill out the limitation worksheet that I showed you a little earlier. And it's one of those things where this limitation is actually based on the kind of healthcare coverage you have. So self-only or family coverage, the deductible for the coverage, the filing status, your filing status, and which months you were enrolled in Medicare, if any. So you must account really. What happens here is that the authorities want to have some kind of granularity here. So you must account for all 12 months of the year on the worksheets. And so this is where you have to be a little granular. And so you want to compute Section B similarly in case this is like you want to account for the fact that Medicare Advantage MSA distributions are actually applicable to your situation, and if the additional tax on non-exempt distributions is 50% in all cases though. But one thing I need to say before closing to this conversation is that age is not a factor here. Age is definitely not a factor. It's all about do you qualify or do you not? Are you eligible or are you not? So it's not about age per se. Thank you so much for your attention. I really appreciate it. In today's conversation, I was just talking to you about Form 8853. And let me quickly do a recap here. So I gave you the overview, the approach, the steps, and now the recap. Thank you so much. God bless you. I'll see you next time. But until then, remember, stay marvelous.